friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened during the day in the markets and how we can plan for a better trade for the next day. Remember, this is analysis for February 24th, Thursday, and expiry date 2022 next. Tomorrow, basically. Yeah, so a bit of a flat day, in the markets, and the market continued to consolidate. And we have an monthly expiry that's coming. February month expiry is coming. Let's see what exactly happened in the market during the day. So as usual, our pre-market analysis will be for Feb 24th, Thursday expiry, based on all of these parameters that you see on the left side, and we'll have additional data analysis on all the additional things that you see on the right side, and we'll have some actionables and then wrap up. Right? Look at the candle. It is a bull trap actually, right? Here also it's a bull trap. Bull trap happens when you have a high that is broken by the current day's candle and then ends up closing below the previous day's high, right? So that's clearly what happened in Nifty today, right? It gapped up and then moved up and then could not sustain for resistance and then closed below the previous candle. Here in case of Nifty, it managed to gain few points and then close above the previous day's high, but again that also gapped up and then failed to sustain the resistance, right? So resistance was found for Bank Nifty at 37,700 and Nifty at 7,200 kind of levels. So Nifty lost 29 points, Bank Nifty got 20 points, right? So both are having a bearish candle, as you see. Remember that is after a big bounce up from the 20-day moving average and Fibonacci 38 retracement levels that bounce up. After that big bounce up, then it's probably taking some rest or facing the resistance on the upside for the move, right? So intraday action, if you see, this is what happened in the intraday, right? Market gapped up, Nifty also gapped up, then it faced resistance at 17,200 and above levels, and then it dipped and again tried to attempted to clear the 17,200, again faced resistance, and then the last 1 hour was a big drop of 1,500 points. Bank Nifty the same. There's a gap up. It failed to sustain the resistance by 37,800, 700, that kind of levels, right? So that is seen in intraday price action. Bollinger Bands are showing that there is clear volatility contraction that has happened on the Nifty. Bank Nifty also, Bank Nifty is more or less the same volatility range it has become, but slight bearish bias there because it is close for the median on both the indices. And there's no years of a bearish, bearish market from the Bollinger Bands. At least Bollinger Band says it's going to be sideways, right? With more or less in the volatility Nifty and the Bank Nifty now for a shorter period of time. We don't know where this consolidation would end up, but we can clearly see that it is just beyond that sideways movement in Nifty, and it has been doing that in the Bank Nifty sideways clearly since long time. Support resistance levels, if you see the first resistance that it is facing here is 7,200 in that band, and then if that's taken away, then you have resistance at 7,400, 350, 400 that range. Then after that you have 7,500 to 7,600, which Fibonacci 23 levels where the resistance is there. Below that it's 7,800, 850, which is where the resistance. Downside, the support will be 17,000 first, 7,050 that band. 17,000 is broken, then you have 16,800, 900 Fibonacci 38 from where it bounced the other day, and if that's broken, then you have 16,700, 750, then 16,500, 550, 650, then you have 16,350, 450, which is Fibonacci 15 the downside. So that's support resistance of the Nifty. Bank Nifty, the resistance first is 37,800, and that's where it 700, 800 is exactly where it collapsed and faced the resistance and fall today. And above that, the next resistance will be 38,000, and above that you have 38,500, and then above that you have 39,000. Looking at the supports downside, you have 37,000 resistance with support first, and then if that's broken, you have 36,800 levels to Fibonacci 38 retracement level, and if that's broken, then you have 36,000 kind of levels. So that's the support resistance levels for Nifty and Bank Nifty, making out of these levels. Momentum and divergences, if you look at that, the price momentum is sideways for the Nifty, sideways for the Bank Nifty also, as per the RSI charts. And medium term also, this is the short term, but we're talking medium term also is a sideways momentum. There are no divergence such as seen on the price. Trend indications, if you see, the trend is bearish, continue to be bearish in Nifty and the Bank Nifty also. But the bearishness is showing a slow rising trend strength is seen as indicated by the green on the Nifty, but it's very weak. So trend, bearish trend with not enough strength in that bearishness. That's what it is on the short term for both the indices. Volatility, if you see VIX, India VIX has cooled of 8% and then settled at 24.5 kind of levels, right? Line volatility is 22.39, IVP is 87.15, high levels, and any VIX above 20 is not that easy enough to trade. So you need to maintain the caution. So that's about the volatility in the market. The volatility is basically the fear and greed index. Open interest data analysis, if you see, what you see here is a lot of resistance. Call writing has got added up in Nifty. Bank Nifty the same. Huge call writing is added up for the month before the monthly expiry tomorrow. Overall, there is slight bearishness, but not bullishness is not clearly evident. Put call ratio is 0.73 for both Nifty and the Bank Nifty. Short build up with what the futures open interest data is showing 1 day ahead of the expiry, but long build up is what Bank Nifty is showing. So open interest charts shows that on the futures shows that Nifty is long, right? Now look at the range is 16,500, 7,500. It's again a 1,000 point range. That's range. 17,000 to 18,000 also has got enough put writing and call writing forms another second level of range, right? Bank Nifty, the range is 37,000 and 38,000. It's a 1,000 point range. So this is the places where the highest put writing and call writing is it. There is 6,000 and 39,000 also has got good amount of put writing and then call writing. So that's a range, make a lot of these ranges and then correlate that, relate that with the support and resistance levels that we just had out of the Fibonacci and different previous resistance, support areas, zones, relate to that and find your place where you have to make the entries and then make the exits. Now look at the heat map. Heat map shows that not big red, but there are some greens which held the market uptight. Kodak, Infi. Basically, financial services, banking finance was doing good. IT also was good. Metals were good. A lot of sectors that performed today. The only thing is that last hour sell-off took away all the gains. That's what happened, right? There is greenery is not a red, full red at all, like it used to be day before yesterday. Look at the index heavy whites. You can see that the HDFC is showing red. It's very close to any resistance, sideways momentum. HDFC also red, met with the previous resistance, sideways momentum. Reliance is within a cup and handle pattern, sideways momentum. It's kind of red today. Infi is also showing some red, sideways momentum. Consolidation is what is happening. TCS continue to be slightly bearish, right? Momentum is sideways within a trend line channel. Kodak Bank showing some green, is trying to move up to face the next resistance above there here. Sideways momentum, good volumes, right? It's trying to come up, close green. ICICI Bank is red, sideways momentum, it's facing some kind of issues there to move up. Selling happened in this, if you see the heat map also. ICICI Bank big selling has happened. So that's the index heavyweight. Overall, if you see, Kodak is doing good, the comeback is happening. Lands at the channel, not sure whether to go up or not, facing resistance there. So otherwise, other than Kodak Bank, nothing bullish is seen in the index heavyweights. Sectoral performance, if you see, it was flat kind of day. IT flat, metal flat, auto flat, pharma flat, FMCG flat. Reality was bullish. It recovered 3.5%, which it had lost the previous day. But remember that the bearishness in the moment you see in the IT and the pharma. IT and pharma, because of the US impact, both have heavy dependency on the US markets. So they are bearish momentum. Otherwise, metals, auto, FMCG and reality are sideways momentum, right? Not bearish yet. right? But it was a flattishness. All sectors across major sectors are showing the same flattishness. Now look at the institutional participation. 23rd February, you have 3,470 crores of selling happened. And who is the savior? It's the domestic institutions are buying almost equal amount, right? So domestic institutions has been buying heavy in the last 3 days ahead of the probably ahead of the big government IPO. No. So domestic institutions mainly the mutual funds which are buying big. That's why the market is not falling heavy despite the Fyers selling hard. So it's a concern. Fyers selling continuing non-stop is really worrisome about the market. But the moment they stop selling, gone. Right. So that is a fear in the market. Right. So dollar, uh, right right side is using dollar consolidating, a big spike, sideways momentum. USD are also kind of consolidating, trying to move up to the resistance zone, but below the 75. That's sideways momentum. So that's about crude oil is at levels above the 1991, which is very high level. It is tentative looking at the charts and the momentum indicators. It's likely to move above the 100 again. Gold is facing resistance at the 1917 kind of zone. And only if that breaks out of that, can be said that gold is really breaking out. Until then, it would be attempting to break out. That's all. But the momentum is very good. Volumes are good. Chart patterns are bullish. So let's see if it happens this time or not. It has been doing that for 2 years now, almost. Trying to break out the top and then faces resistance, come down. So that's happening in the gold since 2 years almost. Before the so let's move to the US markets. We're using Dow Jones is again dipped yesterday with a 400 points dip, and it is at a major support zone. Now, tomorrow is going to be critical whether it's going to stay in this zone, consolidate, or bounce it from here, or for crack and fall down. The momentum is going to the bearish zones. Trend is bearish, so we have to be extremely cautious. If the support is gone, then probably it may mean a major correction in the US market, and our market will take it up and respond. So most likely. Nasdaq is showing some green and the channel trend line top and support zone on the S&P 500 also is very crucial, right? It's some green today in both indices. Dow Jones had closed yesterday, so today how it is reacting we'll have to watch, and tomorrow how is it closing also we have to watch. So overall it's on the edge. Next was two items. Adani green is giving a good breakout pattern, good volume, good trend, good momentum, and price pattern is also bullish. There is some selling pressure on the top as indicated, but wait for the price to move above the high of this candle before you can trade a swing trade. Dr. Reddy's lab seems to be breaking the major support zone. If it is having a red clear bearish candle below this, you can give good short side selling. Right? Short side trades we can get from Dr. Reddy Labs. Momentum is bearish, trend is bearish, volumes are very low, price patterns are breaking the support zones. So if it breaks and gives a clear bearish candle below this, most likely it can give a very good risk reward. So Adani green, it's a long, and Dr. Reddy's lab it's a short trade. Wrap up is a neutral to bearish. The market is sideways, but there is a bearish bias. That's my view. Neutral to bearish. Reasons: the chart patterns, resistance levels, indicators, momentum, trend indicators, all are showing it's a sideways or a bearish. Trend is clearly showing it's bearish trend. Right? Price movement overall is showing it's sideways movement. Price patterns are showing mixture of both because it's a choppy market with highly volatile. So from the price patterns, it's difficult to find out the trend. Trend indicators are bearish. Markets, US market is mixture. Dow is down and Nasdaq is showing some green. Whether we'll sustain it or not, we'll have to see for tomorrow morning pre-market. And the war seems to have already started. So some bit of the uncertainty is gone, but still there is uncertainty. So having no uncertainty gone to some extent is reflected in the market when the market moves up. But whether it will escalate to a higher war is what we'll have to about the market will be looking forward basically to react. So if it is the war is does not escalate to beyond the sanctions, then it's going to be going to be a bearish cycle that will start. But otherwise, it may consolidate, and then once the crisis is over, it would again, it may move back to where it was before, right? So volatility is a fear and greed indicator, and above 25 is the reason is showing because of the same reason, right? Fear the market is what you see there. If Fyers are continuously selling is a concern. Positive factors, if you see the market is not ready to give up, there are buyers out there to buy it. There are good supports down there. There is a bounce back that happens. There are sellers also equally. There is another fact, but these are the positive factors if you look at markets still showing some strength. So stay away as long as the VIX is not coming down to 20 or 20 below levels, right? So this may be a time for SIP investments in quality stocks, right? Always go for, if you're doing options or derivatives, go for risk defined strategies. If overnight portions are there, right? Clear risk and option strategies. If you're not sure what are those, then check out my videos on the option strategies, trading strategies, and option setups. There are a lot of videos on that. So intraday, always go for tight stop losses. You never know when the market. If you're not a professional trader, then stay away from it, because it will be very difficult to sense when the market sell-offs happen. Like it happened today at 3 o'clock. It was a big 100 point, nearly 100 point down move just in 5 minutes, less than that. So that will wipe out all the gains, and then you will end up losing more than what you thought. So go with tight stop losses, right? So that's a neutral and bearish mixture view is what I have for tomorrow. You should form your own market view based on the inputs that's given, otherwise, and not take my view blindly based on what studies we have done on different price, momentum, trend, volumes, and price, and all the different patterns and volatility. And a mixture of that will help you to form your own view, right? I am talking about my view, so your view definitely can be different, right? But if it helps you in framing your view and a trade plan for next time, consider hitting the like button and share it to maximum. We have very few subscriptions, and your likes, hits, comments, feedback, everything helps a lot to keep us motivated to doing this. Thanks for watching. Happy trading, happy learning. Bye.